Inflation just hit a 30-year high, and if your raise this year is less than 6.2%, you have lost money in the long term. We will tell you exactly why in this week's episode of Neighborhood Money. Hello, neighbors, and welcome to episode 16 of the Neighborhood Money Podcast. Oh, yeah, we're here.
Oh, my gosh.
A video podcast here to help you grow your financial knowledge and build a life you deserve. Yeah, Drew, we're in 16. It's been quite a ride so far, and it has been a lot of fun.
Yeah, no doubt. We were just looking at some of the stats the other day, and it was above our expectations for where we've brought this podcast by this time in the year. And, you know, it's too bad that we kind of sold ourselves short on some of our goals. And let's hopefully we can add those up and, really push for something better in the next year 2022.
Yeah, actually we hit over 1,000 downloads this past week, so we want to give a huge thank you to you, the listener, our neighbor, in helping us get there. We also have 37 people subscribed over on our YouTube channel, so we're taking this podcast and we're growing it, and that's ultimately because of you guys listening in each and every week.
And our goal is 100 by the end of 2021, so if you can help us out, click that subscribe button.
So we got an episode today all about inflation. The headlines are huge right now. You're seeing inflation 6%. You've seen inflation at 5% for the last couple of months.
Absolutely.
I'm sure a lot of people have questions on, well, what the heck does this mean? We're seeing 6% inflation as of October, but what does it even mean for us? Like, why should I even care? And that's exactly what we're going to dive into in this week's episode.
Yeah, I would say the headlines are a huge reason on why we were interested in doing this episode. It's throughout every news channel, whether it's a financial news channel or just a normal media outlet. It tends to come up time and time again, looking at certain gas prices, food prices, etc. And we're hoping that this episode can kind of go through some of the reasons why there is inflation, where it can be kind of good, where it can be kind of bad, and just kind of go through the scenarios and just kind of help everybody understand, including ourselves, a little bit more about inflation.
And make sure you stick around, because Drew and I will give you some of our thoughts on how you can help combat inflation through different investment options. But first, Drew, I think before we get going, we've got some trivia to go through.
We do. One of them is actually very related to this week's episode, and it is, over the last 100 years, what is the historical average inflation rate in the United States? And then for our second trivia, this is the more non-related trivia question, little fun one. So on this,
kind of in my wheelhouse here.
Yeah. So on this day, November 15th, in the year 2001, what gaming console was released? And I think that might be in your wheelhouse too, Stack, because I think you like the game.
That's what I'm saying. So the current state of the economy, like we were just saying, inflation is the big headliner.
Mm-hmm.
And the fact that inflation has hit a 3-decade high as of October, coming in at 6.2%. That's crazy, Drew.
6.2% is ridiculous. The fact that that's the way the prices for just your normal goods and services have gone, that really affects your pocketbooks. If you're just your normal average Joe, just trying to go to work, get some gas, get some food, and, even if you have any kids, just buy some of their food for them too. So 6.2% increase year over year is pretty crazy compared to what the average normally is, which I can't quite say yet because trivia question. But the fact is that they keep saying it may be transitory, so only kind of short period. We'll see where that actually goes, but it's something that we need to look at and get under control.
If we think about the 6.2 coming in right now, it's a lot different than even 6 months ago when, inflation was still high. If we think back about 6 months ago, the higher inflation was really driven by specific industries in our economy, whereas now inflation is starting to broaden and it's starting to impact everything from groceries and gas, whereas before it wasn't quite as widespread. But there's a lot of potential root causes when it comes to inflation, probably very familiar going through social media on specific things that are pinpointed, but it's a lot more complex than that. It's not any given single issue that's causing inflation. There's a whole list of things that are happening right now.
Yeah, my pumpkin this year for Halloween was based off of part of these root causes for inflation. And one of them is just these labor shortages. So my pumpkin was actually uncarved and I just put a sign in front of it and said, due to labor shortages, this pumpkin one was unable to be carved. A lot of people thought it pretty funny, but it's pretty real where the fact that there's a labor shortage, it's these companies are trying to ask or they're pushing out higher wages just to get people onboarded so they can, push the product out. And that price or wage increase doesn't go unnoticed and it tends to get pushed off onto the consumer through price increases.
And what's causing that labor shortage is very complicated too.
Hmm.
We're sitting right now in a stance where, or a place where we're in the midst of a pandemic, hopefully towards the latter half of it. But we've had a massive amount of stimulus money come into the economy.
Hmm.
We've also had people that can continue to work have grown their savings.
Yeah.
And so you're starting to see some people taking an extended leave of absence from their job because they have this built up savings. And, that's just
Hmm.
one of the many things. Another thing is that you're starting to see a lot more retirements happen. And so the actual amount of people that are able to work are not replacing those retirements. And those are just two
Yeah.
things that are really driving the labor shortage. And don't get me wrong, I'm no expert in
Hmm.
any of this, but it's just really trying to get a point across that this is also complex and there's many different things that go into it.
This is a very strange environment for inflation. And the reason I say that is the people that either were unemployed because restaurants or your businesses were shut down, they went on to an unemployment that had an additional kicker on top of it. You also had stimulus checks that came out throughout the year. So you have a scenario where you have people that aren't necessarily working and producing and servicing goods, but they have potentially disposable income to spend. And this extra money flow into the industries have caused then a supply shortage. So there's now been a huge demand, not enough supply because there's a shortage in labor. And on top of it, because there's that shortage in supply, you then have people rushing to purchase that product. And when they rush for it, they don't care what they pay for that product because they just need to get it because they know if they don't get it now, it's going to be 6 months, a year down the road before it even comes.
Remember back probably a year ago, maybe a little longer than a year ago,
Hmm.
when there was a massive rush to go get toilet paper and you just couldn't find them on any store shelves?
Yeah, I didn't
That was
understand that, but I do remember that.
But I mean, the pandemic in itself has really disrupted the supply chain, whether it's through labor shortages or factories not closing down, but significantly decreasing the amount of output that they're putting out into the economy because of the anticipation of lockdowns and things like that. People didn't think people were going to spend money, and that is actually opposite of what happened. And so now, as these factories are trying to ramp up, they can't ramp up fast enough to meet the demand of our economy. And so that's rising prices up as well. And I think, Drew, one more thing I want to add to this, we could probably go on for the next hour about the current state of the economy, is I think that there's been a fundamental shift in the labor. And I think that people before they had to go to work because that's what they knew. And now, with whether they were able to go on unemployment or they had an excess amount of money built up, so they had the opportunity to find something else and take some time off, I think that people are starting to see there's a lot more to just work in a job that they didn't care for just to keep the lights on. And I think it's really a shift in what people's lives are or what their purpose is rather than just going and getting a job. And I think that's playing into this a little bit as well.
Like we were saying a little bit earlier, there's really so many factors that go into this inflation and supply chain and workforce issue that there's really not one place to pinpoint, but there's been a lot that we've just talked about right there that really do affect the overall picture.
So regardless of what's causing it,
Yeah.
it is here right now. And it
Yep.
is pretty concerning. I mean, 6% is a lot. If you think about like the average raise of your wage,
Hmm.
it's most likely between the 1 and the 3% on an annual basis. You're most likely not even going to get a big enough raise to meet inflation. But with that being said, Drew, what actually is inflation?
Well, I think what you're saying is a pretty good segment into here. So, if we're saying your raise is only that 1 to 3%, and if inflation is outpacing that pay raise, the reason we say it's kind of losing money. Is inflation is just this purchasing power of your currency that is lessens over time, and in at the same time it also increases the prices of your services and goods. So it's kind of a double whammy, and it kind of goes, I guess, hand in hand though, because you lose less power and obviously things are going to be more expensive then.
So, to put it in very simplistic words, inflation is just the rising of prices for goods
Yep.
and services. And that's why when your wages don't rise with the same rate as inflation,
Hmm.
your purchasing power, which is the amount of goods and services you can make with a dollar or with your money, that goes down. And so you can see, like Drew said, you have that double whammy of costs are up and the money that you have is down.
This, we talked earlier of reasons why, but if you wanted to put it into more technical terms, you could break inflation out into about three different sections. The first section would be the demand pull inflation, and this is saying there's more demand than the supply can ask for. So that's kind of us talking about, let's say, auto sales. There's not enough new vehicles, but there's a huge demand for them, and that's going to increase prices. The second section that you could break out is the cost pull inflation. And this is saying that your cost of goods to producing that certain product is increasing, and the business will then say, well, the cost of my goods have increased. For me to make my margins, I have to pass that cost on to the consumer. So that's the second way for inflation. And the third way is just this built-in inflation. And that's saying over time, because costs have increased, that means that employees want their wages to increase. So this one is saying that wages within a company are increasing. And once again, the company then says, well, we still need to make our margins. We still need to cover all these wages. So the only way to do that is to then increase the price of our product or service.
And I'm no economist, so Drew, when you pull these three together, it's the first time I've really actually looked at it, probably since I took econ in college. But it kind of seems that right now we're kind of in this perfect storm that all three of these types of inflation are impacting the current economy.
Yeah, when I was writing these down and just to have them in like a good format for us, that was my exact thought, is this perfect storm of your three sections of inflation, which normally over time, kind of just slowly one takes over the other, and right now they're all there at the same time. At least that's what it seems like, because there's a supply shortage, huge demand. There's not enough labor to be producing these products. So that's then increasing wages because they need more people there. And while they're trying to attract more employees, the costs are going up because every industry, whether it be in the shipping area, the at the docks, at the trucking, wherever it may be, it just then costs more to produce that product. So it
Right.
really is a perfect storm of a high inflationary environment.
It's almost impossible to say that across everything it raises by X percent. So, Drew, how actually is inflation tracked so that we can say that in the last year it's risen by 6.2%?
One of the main ones I look at is the consumer price index, and that's a pretty good measure of what the inflation rates are, and that's just looking at a lot of the consumer products, and it's
Hmm.
looking at the overall prices from year over year or month over month. And then you can say, this is what they were, this is what they are now, what's that change in the price? Historically, it's been, it averages very consistently. Once again, I can't say tell at the end because that's part of our trivia, but that's what I tend to like to use. But there are a couple more. I think you might have talked about some when we were chatting earlier.
So, consumer price index, or the
Hmm.
CPI,
Yep.
is the main one that is used when looking at inflation. There's also another one that's called core CPI.
Hmm.
And I really like this one because the only thing different between your CPI, so consumer price index,
Hmm.
which is what Drew just talked through, and the core, is that it removes some of the more volatile type of services and goods from that calculation. And, specifically, those are energy and food. Whereas both energy and food can be volatile on a month to month basis, depending on demand, depending on time of year, and
Hmm.
things like that. Removing that from the CPI to get to that core CPI gives you a better understanding of what the economy is, removing a lot of those, more volatile types of services and goods from the calculation.
And then there was one other one that It's not one I've looked at a lot, so I might have to actually read off our notes a bit here just so I get it correctly here. But it was the Personal Consumption Expenditures Index. So this they say just recently, and it was from the Fed's inflation targets, that it's going to be right around the 4%. So this is saying like they're during that index, there's going to be a potentially like a 4% inflation rate is what kind of what they're targeting. And or the Fed's target normally is around 2%. So we can even see during this time, its inflation rate's already double, and that's kind of just their target, their goal to get to, even though it's at, the inflation rate's 6.2%. I mean, 4% is still fairly high, and it's double of what their initial average target is.
At the end of the day, the Fed and the central banks are what control inflation. And like Drew said, they do have that target.
Mhm.
And they can really do this through two main ways. First being they can have monetary policies, which is rising or lowering interest rates,
Mhm.
which can either increase or slow spending. So
Yep.
in the case where inflation is rising, what the Fed and the central banks can do is they can increase interest rates, making it more expensive to borrow, which would then in turn decrease or slow the spending, which should bring down, in theory, inflation.
Yep. Less demand and then more supply.
And the second one is fiscal policy. So this is more of collecting and spending money. And you can think of this as when the stimulus came in, that is fiscal policy having an influx of money into the economy. And that was really to just spur the economy through the pandemic, but it can have a negative consequence on the back end, as we're seeing right now, or as it's partially attributing to the inflation right now.
Yeah, so when you hear terms of quantitative easing, what they're saying is they're either putting more money into circulation or they're trying to take money out of circulation, and that's going to potentially help the finite amount of dollars that are in circulation. So the less money that's in circulation, the more your dollar's worth. The more money that's in circulation, the less your dollar's worth.
And you probably are hearing right now the word or the phrase that, oh, this inflation is transitory. And what that means is that there's just a small period of time of high inflation, whether that's 2, 6 months, whatever it might be. The Fed is coming out and saying that they believe that this high inflation period is transitory because of just the current state of the environment, because of what's happened with the COVID-19 pandemic.
So I wrote down here the Webster Dictionary definition, and they said that basically the word means a brief duration or not persistent. So, in other words, there's really no set time on this transitory word. So, when they say inflation's transitory, it could be a week, it could be a month, it could be a year, it could be 2 years. It kind of gets the waters get a little muddied when they end up using the word transitory. I think it almost is there to help people feel a little more comfortable with where the prices are at right now.
Yeah, it's a gentler word rather than saying we believe this will be the next 2 years, right?
Yep.
Transitory seems very, I don't know, elegant, for
Yep.
lack of a better word. So whether or not inflation right now is transitory, it is here and it is impacting you on a day-to-day basis. And we've talked through a lot of this, but how is this high inflation having a real negative consequence to our neighbor here?
Well, in my opinion, it impacts, I think, rushed purchases, or, if somebody feels like there's not going to be that product on the shelf next week, whether that be pork, beef, toilet paper from earlier, or maybe more of a luxury item as a vehicle. And that just rushes people into decisions without really going into the reasons why they're buying just what they need, not more than they need. And that's one area that it affects them. And obviously, then the monetary side, it really affects them. If you're listening to some of our earlier episodes about budgeting, but if you have a budget for food for that month, and then inflation makes these prices almost double in price, you're really going to have to either be cutting costs somewhere else, or you're going to be eating less that month, or you got to come up with more income.
You don't have many other options outside of that. More than likely, because food prices are rising, gas prices are rising, you're probably cutting back on things that you're doing. And it's really rising across the board, even going out to eat or buying different things at the store, right? Because we're seeing that high inflation right now. So it's going to have to be figuring out that you can make sure that even with a heightened inflation, you still maintain that budget and you still are looking more long term at can you still invest for your retirement or whatever it might be, whatever goals you're looking at. And so it most likely is that you're just making short term sacrifices as prices are increased while your wage most likely has not kept up with it.
Just to kind of go back to what I was talking about a little bit with that rushed purchases is I always like to think of those used auto sales. And I think from a year ago, there's a price increase of almost 25% on used vehicles. I saw somebody on Facebook yesterday saying they just traded in their car for more than they bought it for. And it's just crazy. And these inflationary prices, they almost increase more inflation because you think I want to buy it now because I know in the future it's going to be more expensive.
That is very true. Whether or not that actually plays out that way,
Mhm.
specifically with cars, we don't know, but it's definitely something to fully think through and consider. If obviously you have to buy food, obviously you have to buy gas, but
Mhm.
those other items that might not be as necessary right now, can you really put them on hold and wait to see how things really settle out? Drew, how are some ways that we can start to combat inflation?
I think the first most straightforward way to combat it would be your wage. And whether it be you going to your boss or your employer, manager, whoever it may be, and asking for that wage increase. And that might be something where you're looking at the entire industry and having to go there with some numbers so you have an idea of where you want your price increase to be. And hopefully
Mhm.
that is one way that a steady wage increase is then going to combat the value of the dollar through inflation that keeps decreasing.
And even if you can't find it within your company
Mhm.
or wherever your place of work is, you can potentially find it elsewhere. So it is more work to find an external opportunity. At the end of the day, not getting a raise that keeps up with inflation, it might be a good time to look elsewhere to see what that market rate is, to see if it can keep up with the heightened inflation that we live in.
Yeah, so that brings us back to our intro of us talking about 6.2% inflation rate since last October. We're saying if you don't have a wage increase of at least 6.2%, you're potentially behind like the inflation rate, which is saying your money is less than what the money supply and the consumer prices are increasing.
And there's a second way now that we can also combat inflation, and that's through investing. And there's a couple of ways that you can do this, but I think the most common way to beat inflation is through real estate investing.
Yeah, the real estate investing is it's not necessarily just flipping houses or rental properties. There's other ways in real estate where it be you're getting cash flow and you're using also tax advantages that you get more of a return on your investment. But also if you're sitting on a physical asset like a house, over time that's going to follow inflation or maybe even be higher than inflation. So just sitting
Right.
there, you're keeping up with inflationary rates and potentially making more money.
It can be very complicated and time consuming and very capital intensive, or you need a lot of money to get in to actually buying rental properties.
Mhm.
But there also are different options in the marketplace.
Mhm.
So you can look to invest into real estate through what they call REITs,
Yep.
which is real estate investment trusts. They have these REITs out there where essentially you give money to, it's kind of like a mutual fund. It's just a pool of money and then they take that money and invest it into real estate. So there are options out there rather than just physically going out, finding a property and buying it.
Yeah, it's kind of like a real estate owner wants to make a bigger company, so they make that real estate company public, so then everybody can put their fingers into that real estate, and they just get the cash flow and the returns from it through dividends and increase the stock price.
And another way you can invest is through the stock market. And while there are impacts with inflation on the stock market over the long term, we've seen the stock market far outpace inflation. And
Hmm.
so putting your money out into the market, into whatever type of investments you want to make, historically speaking, it has been really good to help you position yourself over the long run to outpace inflation.
And then the third is somewhat on the lines of the investing, but it's decentralized currencies. And that would be in the cryptocurrency world or precious metals such as gold and silver. And those are the hot discussion items right now, I would want to
Right.
say. And it's interesting that there's an article that came out that just said, this 6.2 is the highest inflation rates in 30 years is also the same time that Bitcoin and cryptocurrencies have hit their all-time highs.
I absolutely love just the theoretical discussion or the conversation around using Bitcoin specifically to hedge inflation. And the reason is one, because of the techie side and just the newness and excitement of it
Yep.
that I really like. But then also the fact that Bitcoin is a finite asset, meaning that there's only so many Bitcoins available to buy. And so when inflation happens, you can put your money into these finite assets
Hmm.
that in theory will grow with the cost of services and goods. So it's really that hedge against inflation.
Yeah, and this finite number with cryptocurrencies and precious metals, there's always a big argument in the marketplace that says gold and silver are physical. I can touch them, I can feel them, I can put them into products, such as jewelries or technology. And their argument is saying I can touch, feel it, and that's real. And they have a hard time believing in cryptocurrency because they say, yeah, it's a finite number, but the only reason it has value is because a group of people believe there's value in it and putting money into it. So that's like, it's fun to watch that argument back and forth. Both, I think, have their upsides. Both, I think, are very fun to keep some money in to hedge against inflation. But it is something that maybe you might want to think about at home saying, do you believe in cryptocurrency or are you a big gold precious metal guy because you can actually touch and feel it and what's actually there?
For those people that are like, what the heck is crypto? What the heck is Bitcoin? I challenge you to go out and just spend the like 5 to 10 hours, and maybe not even that much. Maybe it's less than 5 hours, just looking at and understanding and researching cryptocurrency because it's a fascinating topic. And
Yep.
I truly believe that it has a real value for our society. Granted, we're in the really early stages here, but I think over the long term, cryptocurrencies in general are going to be a very common thing throughout society.
I wouldn't even say the 5 to 10 hours with that cryptocurrencies. You could easily Google what is cryptocurrency, is it better than precious metals, etc. And a lot of those articles out there are going to tell you just the really bullet point areas of these cryptocurrencies. And it really gets your mind thinking in ways that you didn't realize the applications for these cryptocurrencies and these blockchains. And after you do that, that maybe takes you 5 minutes. I bet then you do what Cavan says and go to that 5 to 10 hours into it because you'll get
Right.
in the rabbit hole. You really see the application that it could bring to this world.
Especially if you're going to start investing into it. And I
Hmm.
think I'll just throw a disclaimer out here. We're obviously not financial advisors, so don't listen to anything we say and do your own research.
Yep.
But if you want to invest into crypto, it's super important not to just throw money into it. You got to do a little bit of homework. You got to understand the asset that you're investing in. But like Drew said, I completely agree with him. If you find that article and it piques your interest, it's very easy then to go down the rabbit hole of 5, 10, 50, 100 hours of just what the heck is this asset and how can it benefit myself and society. So with that, I'll take a short pause in the episode to have a little podcast support plug, Drew. But like we said earlier, we had far outpaced our goal for 2020 and really starting this podcast. So we want to ask all of you, our listeners, to help us reach our next goal, which is to get 1,500 podcast downloads by the end of the year. So if you have found value in our episodes thus far, and specifically in this episode, please just share this podcast
Yeah.
with one or maybe even two other people so that they can get value out of listening to the podcast and hopefully can improve their financial position and their financial literacy.
Yeah. Not only do we ask that you do that, but we challenge you to share with one
Right.
person. Let's make it a little bit of a competition.
And if you do follow us, or if you watch us over on YouTube and you're not subscribed to our channel, please click that subscribe button. It is in the bottom right corner of every video, and it's also on the YouTube page. So subscribe to our channel, like the video, because that also helps us grow the
Yeah.
platform.
Because we're trying to get over 100 subscribers by the end of 2021.
All right, Drew, what are some of your takes on inflation? We've talked a whole lot about it, but we really haven't given, what our personal opinions are on it. So what do you think about all this?
Yeah, my personal opinion on inflation is there's been always talk that you hear that inflation is good, inflation is great. You need inflation in your economy to be good. And when I hear that, I believe that when they initially said that, it was in a time of our economy when a lot of people had a lot of money saved up in their account. They didn't spend above their means, and they also weren't going out and taking huge amount of debt on. And so at that time when inflation did increase, it tended to come through wage increases. So as wages increased in the economy, that means people had more disposable income, which then made them go out and buy more. And it kept everything within their means. Now, I think there's so much that gets put onto debt, and so many people have so much liability out there in their own money, and they overextend themselves. And it's happened through being able to have such low interest rates and not, being able to qualify so easy for that. So they can say, hey, it only cost me this much a month, but they don't look at the overall picture and say, okay, I just bought this ATV, this trailer, this ice house, this new vehicle, a new house, and they say it's only X amount a month, but at the end of the day, when you add all that up, you might be $400,000 or $500,000 in debt. And that
Right.
even goes along with education. It's not only the money people take out just for tuition, but it ends up being for room and board, it ends up being just random spending money. When you can finance everything, it's a lot easier for a company to then increase price year after year because people will buy it because they can.
I think that's very true in the educational system. If you look at, and I forget exactly how fast or how much college education costs have risen, I think it's 8% per year. But that's because there is just this massive amount of free money, as you might be able to call it, for the schools. And they're able to take in that money and develop bigger and better campuses or whatever it might be because they have this continual influx of money. And that's probably true, like you were saying, across the economy.
And I would say overall, what you're seeing is wage increases don't keep up with consumer prices. And I think that's where it's really gone too far. And the inflation right now, I don't believe is super great. I mean, it's you have people overextended that aren't getting pay raises that follow this inflationary rate, in my opinion. But it's really crazy and interesting to really look at the whole picture and put your 2 cents into it.
The wage piece is huge. We've had, I forget how long, but decades of limited wage growth. And I think the fact that now we've had the pandemic, just this perfect storm of everything coming to fruition and now leading to this heightened inflation rate. And I think it's actually just changing the economy as we knew it, whether
Mhm.
that's through people deciding for their job they don't want to work in the industry they were working in, or they found more to life than making the money that they had. So maybe they decrease what they're actually doing outside of their job. And I think all of that kind of just plays into it along with stimulus. And so I don't necessarily know, how we go from here. But the one thing that I think, and I've said this almost every single week, and this is something that Drew, you and I preach on pretty much all the time in this podcast, is that it's just another reason to invest and to have really strong money management skills, because even in heightened inflation, having those fundamentals built so that you can budget, so that you can realize where your money is going, as well as invest appropriately for the long term,
Mhm.
is ever more important now than it was a year or two ago because of inflation.
You have to find a way to hedge against this inflation. And as you said, we do preach on investing, and that's one way to do so. But we want to challenge you guys that you can find other options than a savings account and other
Right.
options than just spending your money on things that maybe won't last or you don't necessarily need, and be able to weather these storms like a year or two that we've just had. And they don't happen often, but when they do, you want to be in a position that you're able to succeed. And I think we should then segue into the trivia for this week's episode.
All right, let's do it. I'll read them off and you can give the answers. How's that sound?
That sounds good.
All right, so the first question here, Drew, over the last 100 years,
Mhm.
what is the historical average inflation rate in the United States?
The historical average inflation rate is 3.2%. And this is the average inflation in the US. But it says there's also as high as 18% inflation and as low as
Yep.
negative 10% in some years. So, as I haven't been talking throughout the episode, the average rate is 3.2% increase a year. So, when we're at 6.2, we're double that, which is crazy.
And that's even higher than, right, the gold for 2% inflation rate.
Yep, absolutely. And that's something that the Fed tries to keep under control, and they have a hard time keeping it under control and keeping it in that 2% area.
So, second question, Drew, on this day, November 15th and 2001,
Yep.
what gaming console was released?
It was the Xbox, the Microsoft Xbox in 2001.
Nice. That is a console I do not own, if I'm going to be totally honest. And I own a few of them.
Yeah, I think I remember you always being a PlayStation guy.
Absolutely. It was much better than everything else out there. I'm not biased at all.
And I felt like I liked Xbox and the Nintendo ones, but I haven't played video games in quite some time now, so I wouldn't even know which one I like better now. But, interesting enough, I don't know if there's something in the gaming world, but when I was reading this trivia question or finding it, the same date of November 15th, the PlayStation 4 came out, and I can't remember what year it said that was. I think it was maybe 2003 or 10, I don't remember, or 2013, one of those years.
Probably was like the 13, 14, 12-ish, because I think we were in college at the time.
Okay, but I found it very interesting that it was on the exact same day the Microsoft Xbox came out.
Yeah, it's got to be as these companies gear up for the holiday season, get their consoles out now so that it has a mad rush to be able to buy them for the holiday season for their kids. That's my guess. I don't actually know.
That could be it. That could be it.
So we've got some big news this week in the neighborhood. I know that we've mentioned this several times in the past, but what the heck's going on over there in the Nori household?
Well, if anybody's watching on YouTube, they might notice I have a little bit of bags underneath my eyes. That's because we just had our baby, Thomas Andrew. He was 8 pounds, 7 ounces and 21 inches long. Pretty good sized boy, came 2 days before the due date. And we've been trying to, get used to having a baby in the house ever since.
So how is that adjustment to, dad life, to being a parent?
Well, I would say I still feel like it's a dream or just surreal. It doesn't feel like it's actually my kid, or our kid, I should say. So that's like one big thing of just getting used to having a baby around. As far as waking up at the middle of the night, there's like the smallest peeps, I just feel like I need to get up or look. But Jordan's been awesome. I mean, she's feeding him right now, and so there's times where she goes feeds and she just lets me do a little bit more sleep. She goes, one of us has to have some sleep and be sane so that we can tell the other person when they're being a little sleep deprived. So that was pretty crazy. I also have to say, going through the experience on the day of the baby coming out was intense.
That's, I think, understating it.
Yeah, I was right beside Jordan and holding her left leg, and between the cramps before she got up on the bed and when she started pushing and having the baby come out, hearing the first cry from the baby or Thomas, it was crazy. I mean, I can't even really explain it, but I just know it was really intense. I felt like I was in the zone, though. It felt like game day. And I was just like in the zone.
You were preparing for 9 months up to that point.
Yeah, and I told Jordan and the doctors and myself that I wasn't going to be there helping, like watching at least. I thought there'd be some type of a curtain, but there's really not a curtain there. So I saw everything, and then I said I wasn't going to cut the umbilical cord. I cut the umbilical cord. So it was everything I said I wasn't going to do, I ended up doing, but it wasn't that bad. Like I said, it felt like I was in the zone.
It sounds like you matured in a matter of a couple of seconds as you walked into that hospital.
Yep, pretty much, I think. And interesting enough, I thought birthing or giving birth was like in the Hollywood movies. And so I thought it
Because
was,
everything's like what you watch on the TV screen, right?
yeah, I thought she was going to be at the house and her water broke and I was going to be driving 100 down to Duluth. But that's not how it happens. She had her cramps. She went in and we talked to the doctor and I were asking about the water break and she said, interesting enough, only about like 4 or 5% of women actually break their water before going into
Huh.
the hospital. So
Interesting.
I thought you broke the water, then you went into the hospital, but it seems as if cramps happen, then you go to the hospital, and then your water breaks or they break it for you.
And now obviously everyone's different, but I didn't know that only 4 to 5% of pregnancies started with or had women had their waters break outside of the hospital.
Yeah, I didn't fact check the doctor, so whether it's true or she said that to make us feel good, I don't know.
She's just pulling your leg. She's
Yeah,
just making up.
but I wasn't gonna fact check her at that point.
Yeah, that's pretty awesome. Super happy for you guys. I know you said that Jordy's doing well and baby's doing well. So happy for you guys
All
to be
things
home.
considered,
Now you can enjoy the experience of getting to know the little one.
he'll be there forever. Well, I think that will end this week's episode. I hope you found some interest in inflation. So you'll be hearing it all on the TV. We hope that there's some terms that you're able to hear that we were able to enlighten you on and that you can have a better conversation when it comes to inflation. And we will then see you guys next week in the neighborhood.